Hello, I'm Hans Lee from Livewire Markets and welcome to the Alternatives in Focus series for 2023. Our guest today is Garry Edwards, the founder and managing director of the AAM Investment Group. The focus of today's conversation, agriculture, and especially so many conversations at the moment around farms, rural properties, food security. We'll tackle all of that today. Garry, thank you for coming down from Brisbane and joining us.
Thank you for the opportunity, Hans.
So I know that you've been working in the agriculture industry a while, something like 20 years plus. I'd be curious to hear, just to start, where did your passion come from?
Well, I fortunately grew up on a farm in the Hunter Valley of New South Wales. My family still farms there today. So I've always had a passion for agricultural and really regional Australia, and I've been extremely fortunate to be able to pursue a career. Albeit the size of our enterprise was quite small, I had to move off and go and find opportunities to do that, but I've had a great opportunity to have a career in agriculture.
Yeah, okay. So the firm as it is now has nearly $1 billion invested in a whole range of assets, I note here, across 4 different states of this vast country. What do you find are the most important drivers behind rural property returns?
Well, the key part is investment at scale. There's not a lot of scale in agriculture. We're a very vast land, but there's lots of smaller holdings that are owned by a whole range of families. So the key part is finding that opportunity, investing in different geographic regions, so you're exposed to different climatic conditions, different production zones, and obviously then investing across different commodity cycles. So you're exposed to multiple income earning opportunities, not the price fluctuations of an individual commodity.
Yeah, okay. I'm glad you mentioned climate. I mean, we've just had an El Nino declared actually by the Bureau of Meteorology. How does entering an El Nino, this warm seasonal weather pattern, how does that affect specific components of the portfolio?
Well, ultimately, we'll see some areas, there's 32 assets that we own right across the country, currently inside this portfolio. So we'll see some of those areas experience more rain, we'll see some of those areas experience less rain. The actual volatility that occurs in the markets is actually a great investment opportunity if you've got the ability to move animals between production regions. So yes, the challenge is if you're a traditional farmer investing all of your assets, or your assets are in one location and it does or doesn't rain in that one location, you've got 100% risk as to that fluctuation. But the opportunity, and I guess our approach, is to invest broadly across different production regions so you can take advantage of a lot of those price arbitrages that do occur. So volatility is often a great thing. Okay.
Well, if volatility is a good thing and the weather plays its role in that, what do you find then is the main challenge as an asset manager?
Well, it's the accumulation of scale. Ultimately, we've got to build these assets to make them work and be cost efficient, if you like. We really are looking at targeting a minimum of $100 million inside a region. That's often 3 to 5 transactions to achieve that. And then it's really looking at the employment, getting human resources in these regions. You've got to make it appealing for people to want to be there. Fortunately, over the last 4 or 5 years, there's been a big influx. And one of the byproducts of COVID is that there's a lot more people with professional skills and various skills that we need in the labour force that are now living in these regions. So that's an evolving opportunity.
Okay, well, interesting. I'm curious, when you were talking about assets, how do you find the environment for competition? I mean, we are hearing a lot of chatter around foreign buyers and their interest in Australian farmland. How does that impact the opportunity set?
Well, the foreign buyers tend to be focused on the larger scale opportunities. They're really looking for opportunities of $100 million plus when they're seeking to do transactions. As I mentioned, we're really in an accumulation stage. We're doing multiple transactions, where the size of any individual transaction might be between $10 and $80 million. So the influx of that foreign money is often creating a lot of liquidity within the market. There's been foreign investment in Australia, for 200 years, essentially. So that it's not a new thing. It obviously attracts a lot more attention because we're seeing the large pension funds come. But they're coming because they see the underlying benefit and the opportunity of investing in our farmland that is actually quite lowly priced compared to equivalent places around the world.
Sure, yeah, absolutely. You talk about being in an accumulation stage for the fund. Is that spurred on by where we are in terms of the economic cycle, or what spurs you on to go through an accumulation phase at the moment?
Well, specifically, Hans, what we're doing is really developing out our supply chains. What we're seeking to do is to have enough investment in whether it's in beef cattle, whether it's in cropping, whether it's in poultry production, that we've got enough investment up and down that supply chain to be a price influencer, not a price taker. So scale is quite important. The absolute size of the fund is really not a defined outcome. It's really around how we achieve getting that price influence and how we get an uncorrelated return to the rest of the market.
Okay. How, on that then, I'm curious to find out, how does the recycling of capital work? I mean, are you forced to pay up for new assets or not necessarily?
Oh, look, not necessarily. There's a unique situation that we have here in Australia where the average age of an agricultural decision maker is 63 years of age. That's a very high average, which means that there's lots of opportunities around succession planning. We're really focused on buying assets that have often been in families for many decades, sometimes many generations. They tend to be under-capitally invested because of the constraints around that. So there's lots of opportunities for us to go and find those succession planning opportunities. ANZ's Greener Pastures 2 has highlighted there's a $600 billion problem in the next 10 years in facilitating that. So the opportunity set is quite large.
Okay. All right, and when you say the $600 billion problem, sorry, what did you mean by the problem specifically? Well,
the specific is facilitating a capital exchange through succession planning. We've got such a large volume of family-owned assets and family-owned businesses out there. Where the decision maker, the average at 63 means that there's obviously a lot of people older than 63 in that process. And essentially over the last sort of 2 to 4 decades, we've missed a generation of people in the evolution of them going back into those regional communities and being the owners and managers of those businesses.
Okay, so if we talk about then that succession planning as maybe a headwind or at least a problem that needs to be sorted, what about ESG? Is that more of a tailwind or a headwind for assets?
Well, investing in sustainability at scale is always a great thing in agriculture because there's so many tremendous outcomes that you can do there. Investing positively in regional communities, as I mentioned, the great things about getting these vibrant communities back is you get labour, you get localised services, your cost of production reduces. ESG is a key focus of our investors, and it's a key focus of what we do every day. And there is a great opportunity when you get to do it at a meaningful scale. You can have real impacts that are positive for communities and very positive economic sustainable outcomes.
All right. Well, let's come back to the fund just to finish off. Can you explain the return profile for investors in your funds?
So essentially we look at a minimum 12% total return. The lifetime return of the total funds is around about 13.5%, where half of that's come in the form of capital growth and half of that has come in the form of quarterly cash distributions. So we're very focused about identifying opportunities where we get those diverse income streams so that we can pay that distribution, which is probably not reasonably expected by people looking at agricultural investments. But there's genuine opportunities there because we invest in both the operating business as well as the underlying land assets. So they do generate significant cash outcomes across that diverse range of portfolios.
Okay. Hey Garry, this has been a really interesting discussion. Thank you for joining Livewire's Alternatives in Focus series.
Thank you for the opportunity.
And thank you for joining us. Don't forget to subscribe please to our YouTube channel and to both websites, Livewire Markets and Market Index. Thanks for watching.